You've probably seen the headlines calling crypto ETFs one of the biggest moments in financial history, and honestly, it's not just hype. This is the moment when crypto and traditional finance stopped being enemies and started becoming partners. These ETFs are building a bridge between two worlds, making cryptocurrency way more accessible to every day. Investors who've either always been curious but maybe a little intimidated by all the complexity. But here's what you really need to know. What exactly are these crypto ETFs, and do they actually matter for your portfolio? Let's break it down. ETF stands for Exchange Traded Fund. Think of it as a basket filled with different assets, like stocks, bonds, or even gold. Instead of buying each item one by one, you buy a single share that represents a slice of the whole basket. Because ETFs trade on stock exchanges just like regular shares, you get three things investors absolutely love: liquidity, transparency, and instant diversification. Traditional ETFs have been around since the 90s and have grown into a multi-trillion-dollar industry. But getting one approved for crypto? That took years? Financial institutions pushed and pushed, arguing that ETFs would give investors a safer, more regulated way to get into digital assets. The first big breakthrough came in 2021 with futures-based crypto ETFs. These didn't actually hold any cryptocurrency. They just tracked its price using derivatives. But what the market was really waiting for was the spot ETF, an ETF that holds the real, actual cryptocurrency. After years of back and forth with regulators, who had some very legitimate concerns about market manipulation and security, the pivotal moment finally arrived. In January 2024, the first spot Bitcoin ETFs got the green light in the United States. And the momentum didn't stop there. Just a few months later, the SEC approved spot Ethereum ETFs. Now in 2025, a whole wave of new crypto ETF applications are in the pipeline, opening the floodgates for mainstream institutional investment. And the market is moving fast. We're not just talking about Bitcoin and Ethereum anymore. A Dogecoin ETF is already launched, and there are serious discussions happening about ETFs for Solana and other altcoins. It just shows how rapidly this space is expanding. But with all this excitement, a natural question comes up. Why would you buy a crypto ETF when you could just buy the cryptocurrency directly? Well, for most people, it comes down to two things: simplicity and peace of mind. With a crypto ETF, you get to skip all the tricky parts that scare new investors away. You don't need to open a special crypto exchange account, learn a new platform, or worry about the technical challenge of storing and protecting your private keys. You just log into your regular brokerage account, the same one you use for stocks, and buy it just like any other security. Feels familiar, it's straightforward. And because it's a regulated financial product overseen by the SEC, a lot of investors just sleep better at night knowing there's an extra layer of legal protection. That said, buying crypto directly isn't insecure, it just involves a different set of trade-offs. When you own your crypto yourself, you unlock abilities that ETFs just can't offer. You can stake your coins to earn rewards, move them between different wallets, interact with decentralized apps, and really participate in the crypto ecosystem. Plus, the crypto markets never sleep. You can trade 24/7, weekends, and holidays included, while ETFs are stuck with regular stock market hours. And then there are the fees. ETFs charge management fees for that convenience and oversight. When you hold your own crypto, you avoid those fees, but you do take on more responsibility. It's important to remember that direct crypto trading is also regulated, depending on your exchange and where you live. But ETFs come with that extra layer of compliance that really resonates with a certain type of investor. The real beauty of crypto ETFs isn't that they're a perfect solution for everyone. It's what they represent for the entire industry. They boost mainstream awareness and trust. They bring millions of new investors into the crypto space who might never have dared to buy digital assets directly. They inject massive new liquidity into the market and solidify crypto's place as a legitimate, permanent pillar of the global financial system. So, should you invest in a crypto ETF? There's no one-size-fits-all answer, and that's the honest truth. If you're completely new to crypto, or if you just want simple, straightforward exposure within a regulated system without the headache of managing wallets and keys, then crypto ETFs are genuinely worth looking into. If you're drawn to having direct control over your assets, want to avoid management fees, and value being an active participant in the crypto world, then buying directly through a trusted exchange might be the better move for you. Ultimately, the choice comes down to your priorities, your comfort with risk, and what matters most to you as an investor. So, what's your take? Would you go for the simplicity of a crypto ETF? Or do you prefer the control of owning the coins directly? Looking ahead, which cryptocurrency do you think should get its own ETF next? Drop your thoughts in the comments below. If you found this breakdown helpful, make sure to like this video and subscribe for more deep dives into the future of finance. Thanks for watching.